And we're joined this hour by Al Fullerton from Aliom Financial Markets. Al, welcome back. Good to see you once again.
Thank you.
At the moment, I guess we've got a down day for the markets, and there was concerns coming out of Europe again. What are you finding clients of Aliom are really asking you about, or what are they concerned about right now?
I suppose, following on from the reporting season now, really looking at the opportunities to get into the market. Is it the right time? We're going to be seeing ongoing range trading. Obviously, we've seen the market breaking above its 200-day moving average yesterday, pulling back again today, and we've seen it time and time again, or certainly over the last 3 occasions that it's broken through this average, it's come back down. So we have seen a range trade there, and so certainly clients seeing whether to take profit and see whether or not the market's going to ease back down, and certainly amid these US concerns. And touching on the US, obviously that's an ongoing. I suppose it does continue to hamper confidence in a number of our investors there who like to remain long cash. So that's certainly an area which we continue to look in the equity space there. On the commodity side, it's quite interesting. We're looking at the gold oil play there, and certainly historically the price of gold has actually been about 10 times the price of oil. Now, if you look at where gold is now, obviously at about 1260 is about 20 times that. So a number of people are looking at I suppose you could call it the spread between, or the difference between these two prices, and whether or not there's going to be any closing or any narrowing of the spread going forward. We've certainly seen gold as a safe haven play. Not that investors necessarily want to be buying gold, but it's certainly been seen as a safer place to park cash there. Oil obviously has been relatively choppy over the last few months, so that's certainly been another area that we've been looking at there, and a number of these oil and gold stocks, and gold has certainly been a sector with a lot of noise around it as well. And
so I guess a lot of investors, maybe your clients, feel that we're just in a phase where we're waiting and watching for something to happen. Is it hard to get people interested in equities at the moment? What's on the horizon next couple of weeks to say, jump in there, we're really excited about, the weeks and months ahead?
No, exactly. I think that obviously the election now, there's some sort of, finality around there. Obviously you have to wait and see what happens there, and then obviously there's a lot of uncertainty still in terms of the policies going forward. They're certainly shrouding the mining sector. The bank sector has been certainly one which we've been watching there. Will banks raise rates? And that's certainly something which we have to look at. I think that certainly it could be quite an opportune time over the coming month or so for some of the banks to look at perhaps increasing the mortgage rates. I'd say that the ongoing concern of offshore funding certainly been magnified by these euro concerns overnight. You may well see banks look at increasing their rates there. Certainly CBA and Westpac could be the two bigger winners from that, with the largest mortgage books there. So perhaps we may see some action over the coming months of an increase in mortgage rates outside of an RBA rate rise.
Okay, we can expand on all of that through the hour today. Al, appreciate you coming in for the show. This is Lunch Money, and we do have Al from Aliom. For this Aliom Financial, this issue of management change, I suppose, or restructuring, this is kind of a bit of a theme that I think you've been looking at across the market.
It has been. I think it might follow on from the recent reporting season that we've seen both the US and over here, that it's all been about the forecast, the going forward, how the companies will drive profit and their guidance. And we've seen some restructuring, be it in the financial sector last night, Barclays, HSBC, and across a number of sectors as well there, where it really has been a chance to restructure a board and really, I suppose, react to how the shareholders want to see the company going forward. So that ties in as well with Foster's, obviously, how they're going to look at going forward there, and they're obviously answering their shareholders by the divesting of the two arms of the business rather than perhaps offloading one.
Sure. And James, just to bring you back in here, Al from Aliom Financial Markets, the mining sector continues to be a focus, not only for the booming terms of trade for the Australian economy, but this mining tax.
Yes.
This is an issue now which it's funny because we've got the result, and people say at least we've got, we know who's in government, but still there's a bit of a path to tread here between now and actually some sort of tax being implemented.
Well, that's right, and I think that's when they're looking at, when Wayne Swan was saying, in 6 months' time, it's a 2011 story about the implementation of the tax. Obviously the Greens will be seeing the 44% rise there in the mineral earnings, and be banging the table saying, their 40% plus tax should be there. The ALP are looking at a 5-party coalition now, the 3 independents, the Greens and the ALP. So they have to tread extremely lightly. So how quickly things can be implemented is certainly one question to raise there in terms of the mineral, resource rent tax. Certainly the National Broadband Network was a real key catalyst there for the independents. So certainly that's another area which they have to look at. So they have to tread extremely lightly. They may have had a victory in that sense, but it was by no means an overwhelming victory, and again they have a lot of parties now to please to keep the power there. So it's it's going to be certainly there's some certainty, but unfortunately it's not as much as we would have hoped for.
Although Merrill Lynch equity strategists have put out a note today saying the mining tax really has morphed into a non-issue for this sector, because really look at the commodity prices and look at the demand outlook. That is far more important than a tax on some Australian mining companies.
Sure.
What do you think of that then?
Look, I think that certainly aspects of that, the Chinese demand will remain there, and that certainly is one of the most robust reasons why our resource sector has been prospering so well. I think that you must remember, obviously, a tax does reallocate funds. It distributes funds from one party to another, so certainly there's always going to be a winner and a loser. And I think also, obviously, we must remember that external parties, offshore investors, offshore companies, they don't have to invest in Australia. There are other areas to look at there. You can look at, you got Canada, you've got Africa, you've got South America. There are other areas to look at there, and so we've got to ensure that obviously that we have a balance between obviously what is the correct taxation for our country and for our resources, and at the same time obviously not cutting off foreign investment, because that's crucial for our industry.
And with the carbon tax back on the agenda, and the Greens with quite a strong presence in the makeup of the Parliament, renewable energies and kind of an ethical investing theme is something that clients are looking at with Aliom at the moment.
No, it has been, and we saw that yesterday once the announcement came out. We saw some of the renewable stocks bounce on the ETS side. Look, it certainly is this ethical investing. I think we're going to start seeing this moving forward. It certainly won't happen overnight, but we're going to slowly see this gradually increase. Is looking at these renewable energy stocks, looking at the stocks such as the solar powered, looking at the ones that really will be far more ethical in terms of not being a coal company and not being a resource company that pulls rocks out the ground and causes these concerns in terms of the geographical location. So this ethical investing side will also stem across perhaps the biotech sector as well, and I think that we'll see this going forward. So a number of our clients are actually looking at some of these stocks that are in this space, a lot of these, the mid to micro cap space, and someone like an environmental group, EGL, is an example of a company, and there are a few other ones there which we're looking at wrapping up and providing to people who are looking for more of an ethical investment going forward.
But why do you think that they've gotten a bit of interest now? I mean, this ethical investing has been around a long time. Yeah,
look, I think it's just gathered momentum over the last few years. I think we certainly have seen it's been around for a long time, but I think more and more we are starting to see that it's a relatively easy tax to implement, because people know the negative connotations from pollution and whatnot from some of these other resources, from coal and whatnot. So it is snowballing and it's gathering momentum, and I think it can only go one direction over the coming years, and that will be that it will get more headlines. It'll be another way to easily, it's the same as putting a tax on tobacco, on alcohol. It's an easy tax to implement because we know that there are negative issues and connotations with the product, and so I feel that it will gather momentum, and certainly in the coming years it's going to be an area to watch.
You also touched, Al, on the issue of the NBN. We've had the NBN basically put back on track with the re-election of the ALP, or the successful re-election as of yesterday. So it means basically the NBN Co can restart building their network and resume negotiations for a final agreement with Telstra. Both of these were put on hold while the election result was in doubt. Telstra, of course, welcoming the news, saying it will continue to engage constructively across our many areas of common interest. Optus also praising the independents for their focus on broadband, which you just mentioned there, Al, as well. Interesting, the shares of Telstra have been up quite a bit this morning, up as much as about 1.5%.
Yep.
I mean, it seems a bit of a knee-jerk reaction, though. Did much really change in the last 24 hours for Telstra?
Oh, look, it was a slight positive, sure. I mean, they still have to actually close the deal. The $11 million deal still needs to be finalised. So, there is certainly a few more boxes to be ticked there. But as you said, overall it was positive. Optus, made an announcement thanking the independents on their calls there. So look, overall for the sector, yes, it has to be a positive. But certainly in terms of how the share price will react, remember it is Telstra. It's a sticky register. It's a large stock, and it will certainly trend the index more so than running hard on this $11 million NBN sort of deal. So yeah, it's as I said, it's a positive, but I can't see the stock running too quickly.
Sure, sitting on $2.88. Let's take a